Hey guys, welcome back to another video. In this video, I'll be talking about the stock market. Cause why not? Plus everybody is curious about the current situation of the stock market and how it is going to be moving forward as well. And recently, stock analysts has been talking about things like animal spirits versus hibernation and this and that. Most people has become experts of stocks for some reason, and they all have different thoughts. They have thoughts about maybe the stock market's gonna become great, maybe the stock market's gonna become worse moving forward. And that's what I'm gonna talk about today in 5 simple points. And by the way, this is not any sort of financial advice in any way. This is just me talking about thoughts of even smarter people in a simpler way, and expressing the knowledge that I've newly learned. And you can join me on this learning journey as well. So let's get into it. And on to my first point, which is the market's mood swing. So by the end of 2023 to 2024, the market was booming. S&P 500 was at an all-time high, and all things was looking great, right? And every investor was just investing and throwing money at anything with a pulse. And that's what they call an animal spirit, which is a Keynesian phrase describing a irrational optimism. Also saying that basically if every investors are just thinking the market is doing great, so you're just throwing money at everything, right? That's why they're calling it irrational optimism. So, but now the energy is gone, and everybody just don't want to invest anymore, just try to keep their money safe, which now they call it a transition from the animal spirit to animal in hibernation. So the translation for animal in hibernation, this term is the meaning of uncertainty has frozen the market. Mainly meaning that the people has basically stopped investing, CEO has stopped huge investments also to see what will happen in the future. Why? But why is the cost of it? What is the cost of this, right? There's 3 main reasons. First of all is the trade and tariffs chaos. So no one knows what's gonna happen soon with the new policies that Trump is intending to put on other countries and in the country itself. Will the supply chain get wrecked, or businesses are in a guessing game on what's gonna happen in the future, right? So they don't want to make big moves that could potentially affect themselves yet. This is why they have this uncertainty that has freezed the market. Second one is the AI bubble fears. Some people fear that this AI bubble is that AI has been overhyped, where it has such a huge growth and such a huge future in it for the past year, that to the point where a lot of people think that it might just pop if anything happens, right? Well, personally, I'm not sure if this can happen. I just think that AI is actually a really great tool that is really functional, that will continue to grow very rapidly. But there's this concern that people feel like this could happen. I mean, remember when everyone thought that metaverse was gonna change the world? I guess that's something they base it off. Next is there's an $850 billion inside the money market. Basically, everyone took the money out of the stocks because of the uncertainty and put it somewhere safe. What this means is that there's not much money going on inside where they can make the stock market boom. But if the stock market were to boom, it would be because people would take the money out of the money market, which is the safe place to put it inside the stock market. If this could happen, then the market would boom again. But as far as we know, it seems like this is a huge source of where the money has gone to after people has taken the money out of the market. So yeah, and many people are comparing this to the 2018 parallel situation, where they say that on February of 2018, markets tanked a similar fears where trade wars and Fed interest rate hikes happened, and it caused uncertainty in the market. However, the stocks market has spiked afterwards after this uncertainty, which many people are thinking to themselves whether history could repeat itself. So what do you think? Comment down below. And now to my second point, which is the case of a V-shaped recovery, and also why April 2nd is such an important day. So there's a guy named Tom Lee. He's an analyst, and he believes that even though there is a sharp drop, there's going to be an even sharper recovery, which is what he calls a V-shaped recovery. So why does he think this is going to happen? I mean, based on the scenario right now, most people, they will assume that the market is going to become worse, since Trump's policy has generally, based on other people's opinion, has been worsening the stock market. So what is he thinking about? Well, first of all, he's thinking about how the sentiment is already inside the gutter. What this means is that the extreme fear of a market bottom, when everyone's panicking, the worst is usually already priced in. And since the CNN has been spreading like flashing fears or extreme fears for weeks, this is normally the cause of a buying opportunity. What he means is that once market prices actually go down and the stock market has been down for quite a while, it normally causes a buying opportunity where prices are at very low. And why does he have this confidence that people are even going to buy when prices are low? Well, this is because of what I said previously about the 850 billion inside the cash, in cash, waiting on the sidelines, which is inside the money market. What this means is that they're putting it in a safe place right now as stock market is on a decline. However, when the buying opportunity comes, a lot of people is going to buy because there's a huge chance of buying a low price, and a lot of people is going to come in because of the fear of missing out. And because of this, he believes that there's going to be a V-shaped recovery. And more than that, it's also because of the April 2nd. Well, this is still just partially an assumption that he's making, but he believes that once April 2nd has arrived, the day that could change everything, because they're potentially gonna get clarity on tariffs. So basically, on that April 2nd, they could potentially get clarity on the policies that Trump is going to make. What this means is also is that businesses are going to be able to plan ahead, which means that they could go ahead with the investments or whatever business plans they have in store, which could make stock rise up. And also the tax reform rumors, which if Washington hints that at extending Trump's era of tax cuts, this could change a lot of things as well to the stock market. Now moving on. And now to my third point, which is Tesla and the Magnificent Seven. So if there's a bounce back from this market drop, what would lead the bounce back? Well, in Tom Lee's opinion, it's going to be Tesla and the 7 magnificent companies that he said. But why Tesla? Well, he says Tesla is the ultimate love it or hate it stock, which normally when a stock has a lot of controversial thoughts rallying around, they could have a massive potential of spiking or also massive potential of dropping. But he believes in Tesla. So let's talk about the bull case of Tesla, right? The bull case is that EV demands is still growing, the Cybertruck hype is real, and Elon's political drama like Dogecoin, White House tensions, and those department cuts, those things will potentially fade away after this situation. And if that happens, then Tesla could spike again, which would make the stock market better. And what is the Magnificent Seven? Well, a few examples is basically Apple, Microsoft, Nvidia, and etc. You get it. These companies the ones that led the rally of 2023 stock market got hammered recently, means that plummeted recently because of the AI bubble. The fear of AI bubble has caused them to decline significantly. But why could they bounce back? It's because of, first of all, it's because of liquidity. They are the perfect companies to be able to put a lot of money in and out very quickly because of how big they are. And second of all is the derating done. So some of them has already declined 10 to 20% in the stock market, which this would cause them to have an opening of a buying opportunity, right? I mean, wouldn't you want to buy these massive companies, which is bound to bounce back in time by 10 or 20% cheaper price? I mean, like, that would mean that you're gonna most definitely going to earn your money back. It's just a matter of time, right? So this would cause many people to also be tempted to buy them as well. And third reason is because AI isn't going away. I mean, let's be honest here. Even though there's this AI bubble that caused them to plummet, AI itself, it has proven that it's not going away because of how much it is being used right now and how much we can see that it is fitting into society in general. And also because AI spending is real. I mean, all these big companies are actually spending so much time and research and money just to build this thing. So I don't think this thing is going to fade away anytime soon. And don't forget the financials and industrials. Once the economy bounce back, if they do well, then stock market is going to do well as well. And now my fourth point, which is the catalyst that could flip the script. So there are three things that is the main reason why this entire argument of the recovery of a stock market could even come true. And the first one is because of the policy clarity. If tariffs, taxes, and the regulations has become clear, then businesses will have a green light to operate their business the way accordingly to the new given policies or the policies that has been fixed in the past, which could give them the green light after canceling off the uncertainty of certain events happening without them knowing it could possibly end up like that. And the second one is the FOMO kicking in. FOMO is just a term for fear of missing out. I guess I actually don't know they call it like that, but anyways, they need this fear of missing out mechanism to kick into the market by, I guess, in some way having the dip happen, and then at a cheap price, people will have the fear of missing out buying at a low price, and then this could cause the stock market to rise again. Since I've also said many times, which is also what Tom Lee believes, is that the stock market strongly relies on the investor's emotion itself. So the stock market doesn't really always necessarily go accordingly to the economy or the economic situation, but most accordingly to the people's emotion itself. And the last one is, they have to have the volatility index collapsing. So right now it is elevated, and if it can get it to drop over a certain point, then this would be a green light for the market to go bulls. Well, I'm also learning the full understanding of the terms volatility index, so I'm not very certain about that, so I cannot give you a clear explanation on the definition of it. So if you know what it means also, please comment down below so I can learn as well. But if this volatility index can go down, then it will also mean that the bull market will be more possible than before. And on to my fifth point, which is the bear case, which market gets worse. So let's be honest here. Not everyone thinks that the economy is going to end up better and have a great recovery. most people's gonna think that, well, the economy and the stock market is actually gonna get worse. So why would they think like this though, even though it's pretty obvious based on what we're seeing right now? Well, first of all, it could possibly be because of tariffs backfires. What if the tariffs actually make what if this policy actually hurts growth like 2018, 2019, where actually it makes stocks continue to fall, and this will actually be bad. So that's the first reason. Second reason is because the AI bubble pops. Okay, what if the AI spending growth stops? What I mean is that companies and people stop investing in this advancement in AI, which could cause companies like Nvidia, which has a 2 trillion valuation, hinges on endless demand, and a slowdown equals disaster. So it would also means that this AI bubble would pop because, well, if this continues, less people is going to want to invest in things, and once this happens, then the spending would lessen and the growth would stop and the AI bubble would pop. So this would be the second reason, and the third reason would become because of the fear of recession returning. So what if inflation remains sticky, which it is still sticky right now and probably will be until 2026, and the job market weakens during this process, right? And everything just falls into place and recession happens, then the narrative of a soft landing would just die. That would be really bad. And this would also cause the stock market to significantly drop and crash. So what's the big risk? The big risk is also that by April 2nd, there is no clarity on the policies and businesses cannot be clear on their their plans moving forward, which would therefore cause more uncertainty, and more uncertainty would cause the stock market to continue plummeting. So that would be the bear market case. What is your take on this? And now to my conclusion. So conclusion is that actually nobody knows what's going to happen next for certain. Everybody is guessing, but these are just some of the guesses. Some of them are more accurate in the past, some of them are not, but I cannot tell you for sure which one's going to happen. I'm just sharing my knowledge. But if there's one thing for certain, uncertainty is the enemy. That's one thing for certain. If the market was more certain, if the economy was more certain on its directions, then the stock market would not be facing this problem right now. Of course, it will be also facing a few other problems, but it will definitely not be in this situation where the stock market is absolutely plummeting and suffering from uncertainty, and and people transferring all their money from the stocks outside. But my conclusion is basically that there's both sides in which you can believe, where there's a bear market and there's a bull market. The bull market is basically based off the fact that there would be clarity soon, and the bear market is based off the fact that there is so many other factors that are causing the stock market to be what it is. Well, comment down below what you think, and whether you think it's going to go either way or you think it's going to go a certain way, but it's not because of the reason I've said. And I'm very interested in know, because I'm also on having this learning journey with you, and I'm sharing it with you. But also, this is also not a financial advice or any sort. This is just me making entertainment content. Now, if you enjoyed this video, I hope you like and subscribe, and I hope to see you in the next one as well. Bye.